Well, good morning, everybody. Welcome back to Hot Takes with Keelan and Kari. This is Kari Rae Davis with Kari Sells the City and Keller Williams.
And this is Keelan Harvey with the Harvey Home Team and Highlands Residential Mortgage.
So, Keelan, I am curious to find out a little bit about construction loans this week. I was out with some buyers. I met them in an open house recently, and they asked me about construction loans because there was a new construction home that they had been looking at where the seller was offering a construction loan. It may not have been fully completed yet. So that was something I wanted to ask you about this week because I wanted to be able to inform people about that as an option.
Yeah, absolutely. Construction loans, they get a bad rap in our industry because the reality is uh it's a lot of work on our end. So, there's people that just straight up opt out of doing construction loans. I'm actually closing one this month.
Okay.
They come in many flavors. My favorite are we have a fantastic construction product. In fact, we have construction and fantastic are two tough words to mix. Uh, we have a fantastic rehab loan too. So I mean, it's a great opportunity right now if you find properties that need fixing up, or
Okay.
and you can get a lot of equity in a home by doing a construction loan, and I don't mind doing them at all. So let's get into a little bit of details about what the heck that means. What's a construction loan? It's
Okay.
actually very similar to a regular loan. We have a one-time close. So what happens is it closes in 30 days, the first 30 days on the front end, and then basically during construction, you're charged interest only on the money you use through the building of the construction, typically up to 9 months. You can go up to 12,
Okay.
but typically up to 9 months, and it's interest only that you pay during that time. So on the front end, there's a fixed construction percentage that you have to qualify for. Usually it's a little bit higher. Rates are high right now, but actually it's kind of crazy. Not much higher than where rates are right now, to be honest.
That's
Like, what's
that's what
that?
I was thinking is they're not that much higher. I just got a call from a hard money lender asking if I had anything in the works. And I asked him, what are your
Yeah.
rates right now? He's like 11 or 10. And I'm like, well, that's not that much more than the banks right now. So
Yeah, I mean, the last construction loan I did, and it increased actually before we got moving, was 7.99%. That's the qualifying rate.
okay.
So qualifying rate means that's the rate that you have to qualify for on the front end. But here's the cool part about it. You lock that rate in, and let's say rates got worse over
Mhm.
that 9 months, then you'd be at the 7.99%.
Okay.
But you also have the ability to do a one-time float down before the end of close. So what that means is if market rent is significant, or market rates are significantly less or less at all, quite frankly, you could float down to market rate. Plus, there's like a 0.5% above market rent, but you could float down. And so, especially in an interesting time like we're in right now, where rates are high, it's
Hmm.
possible, and we know they're going to go down. We're just kind of waiting to turn the corner. It's very
Okay.
possible that your rate could be significantly less, when you actually close and you can float down. And the cool part is you're paying interest only. So for example, you buy the land for 150,000. You're paying interest on the 150,000, and then the builder has to buy, framing, wood, roofing materials, whatever he needs to buy. Let's say it's 50 grand. Now you're paying interest on 200. So it kind of incrementally goes up as
Okay.
you get closer to the end, but you never really end up paying for the entire shebang because you're going to convert at the end to a permanent rate. So once you float down, now you have a fixed rate, and now that's your rate for the rest of the time that you have the loan. So,
Okay.
um,
So
yeah, so it's pretty cool.
I want to ask a quick question.
Sure.
So basically, you get the loan, you buy the property, and you're in construction, and you're only paying interest on the loan at during the construction process.
Yes.
And then once the home is finished, then you convert to a completely different loan completely, or just you have a fixed rate after that.
No, and that's why it's a one-time close. So it closes like a regular loan on the first 30 days, and
Okay.
then you just float down. So it's not like you have a whole new loan. It's the original loan that we closed on. That's why I
Okay.
love the one-time close. It just you can float down to the new rate and you're fixed. So
And
you're
and
just
then once you're fixed, then you're paying principal and interest.
Exactly. Yep.
Okay.
Yep. And
Okay.
now you're off and rocking. Your house is built and you're doing your thing.
Okay. So when you are doing a construction loan, okay, so let's say I have a piece of land and I'm gonna build a house. And so do I have to have my contractor and everything kind of lined up with, estimates before I start this process? Or how deep do you have to be?
Yeah, great question. Yeah, there is some front end legwork.
Okay.
I gave you a super simple version, but the reality is, the the builder has to be approved through the lender.
Okay.
They got to be Fannie Freddie approved, which is not a huge deal. They just have to be licensed and bonded. It's different per every lender. You know, they'll have some certain requirements of how much they've built or how long they've been building, things of that nature.
Okay.
But you just have to have a quality builder. They get approved on the front end. You know, they do soft background checks, make sure they're legit and all that. But I mean, I can get builders approved very quickly. Like my last builder got approved in like a day.
Oh,
So
wow.
it's not that big of a deal.
Okay.
Also, legwork on the front end as well, right? You got to meet with the builder, you got to design, you know, there's surveys that need to be done,
Permits.
architectural, there's a lot of front end work that needs to be done.
Right.
And then what happens is after you've had your design, we get an appraisal, and the appraiser gets all of the goods. He gets all of like the design of the home. He knows what you're going to build, and then he comes up with an estimated value based on the finished product, and
Okay.
then they build it, and then he goes back and of course inspectors have to do it as well, but he goes back and looks at it, make sure it's done, and then yeah, I mean you're good to go. So
Okay.
you'll know ahead of time what the home is worth, you know, completed.
Sure. And it's just, this is the different beast, right? Like my parents have built houses and I understand that the whole building process, because I have sometimes people ask me, what if we wanted to find a piece of land to build? And I know it's a longer process. I mean, I would say between permits and being able to start breaking ground, I mean, it might be 6 months, potentially. But just curious, because like I said, I had some people asking and it's interesting to me and I want to make sure that we're talking about things that are interesting as well. So
I think it's a great opportunity. I think it's underutilized. You know, believe it or not, you can put as little as 5% down on our product for construction loan. Most
okay,
banks are 20. You have to have a 740 credit score.
okay.
And there's, you know, your compensating factors need to be good. Like you need to have reserves and all that to get to that 5% down.
Okay.
700 credit score for 10% down. So, I mean, it's nothing crazy. You know, a lot
Mhm.
of times people just opt out because they think they have to have 25 or 20% down, you know, but you really don't. And to be honest, this last one I did was super easy. I mean, we found a piece of land, we were closed in 30 days, and he's thinking it's going to be done construction in 4 months. I
Oh,
mean, now
wow.
they have it down to a science.
Okay.
Olo builders who I'm working with, they pre-order everything, and their systems are incredible, hence why they could blast them out quickly.
Right.
The builder is amazing too. Shout out to Jeremy. But yeah, I mean 4 5 months in total.
Okay. Wow, that's quick. That's a quick turnaround.
Yeah.
Real quick, let's touch on the rehab loan. Is there much difference when you're doing a rehab loan? Because I am running across properties that need to be fixed up. So what does that look like?
Well, there's a couple of interesting things with that. We have what's called an escrow holdback, so you don't even have to do a rehab loan. You can get up to $70,000 as an escrow holdback. What that means is
Okay.
you can set money aside for home improvements without even having to dabble in the rehab loan, which
Okay.
is pretty up to 70,000. That's a pretty good chunk of change. You can do a lot of things with 70 grand.
New kitchen and bath for sure. Easy.
Yeah, and I mean,
Yeah.
we close that thing in 30 days, and then you have 90 days to do the work after the fact.
Okay.
That's the only thing. So you want to have your ducks in a row on making sure you have your contractors lined up. So that's kind of, I think, something that I should talk about as far as a way in which people can improve. Um,
Absolutely.
and then the other thing, a rehab loan works very much the same way, except we're just not buying dirt and building from the ground up. I mean, you can get darn near a tear down on a rehab loan, and they can go in and, you know, do whatever you want to have done. It just has to appraise, and of course, you get the difference of what that appraised value is to get the work done. So, absolutely, if you can find those, by all means.
Yeah. I have somebody that I referred you to last week that I'm gonna go ping him again because he would be a good candidate for that.
Yeah.
Is there a certain what are the interest rates on the rehab loans? Are they a little bit higher, or are they kind of equal to what we're all dealing with?
Yeah, they're going to be higher, but it's interesting because rates are higher. Like it's kind of covered some ground, and it's kind of it's closed that gap a little bit.
Right.
There used to be, when rates were 3 or 4%, you'd see construction rates a little bit higher. Yeah,
Yeah.
they're going to be a little bit higher. But the reality is, if you're rehabbing that loan, you're also going to have a boatload of equity.
Right.
Uh, this construction loan I did, they have like, I don't know, 40% equity or something in the house after it's done. They put quite a bit down, but it's a pretty good chunk of change. So,
An option. It's nice to have these conversations because I feel like our market, the market since I got into real estate in 2014, it's been so hot that, people are they want to buy a house and they've got a timeline. And so talking about building or doing rehab loans, that hasn't been much conversation around it for me and my buyers because they've had different goals. But I think
yeah,
now that things are, slowing down to the point where it's not such a frenzy right now. I mean, granted, we're in the fall season, so it's not like it is at springtime, but it's nice to be able to have these conversations with people and be able to think about other options to get them into homes, or other options for maybe you do really want to have a house that you work on. I mean, I've had buyers where they wanted an older home to fix up. That was their dream, and that's what we found for them. So, thinking about doing a rehab loan, I think is smart if you need it. So I'm glad we got to talk about it a little bit.
heck yeah. And I will talk about the one thing that I run into with people that is harder is to manage is if you rent or you have a mortgage and then taking on that new, even if it's an interest payment, it's less, but
Right.
you have two bills at the same time.
Hmm.
So, but I tell you, people get creative. I've seen people that have moved into like literally trailers, just
Right.
till their home is done.
Waiting.
5 months we go buy a double wide or
Yep.
something. I don't know. I've had these people moved into her mom's basement just until it's done,
Right.
I mean, you got to do what you got to do to make it manageable. That's the one hurdle that I find that people need to get over.
Okay.
But if you get creative, by all means, and I think if it's worth it if you can do it.
Well, and it's like looking at real estate in general. I mean, it's a long game. We're looking into
It
the
is.
future. Like you got
Yeah,
to have maybe a little bit of pain for a little while in order to get that, get that goal met. So, I mean, nothing, no risk, no reward, basically. So,
exactly. And your creativity is endless. There's a lot of things you can do to make it happen. And most time they can get things done in 6 months, 7 months construction loans. So
okay.
it's not that long in the bigger picture, right?
Right. Yeah. It just depends on your permitting process. I think it depends on
Exactly.
what city you're in. So,
Yeah, but the good news is we wouldn't start on that until you get all that stuff done, right? So you're
right.
not going to start paying interest until you're already through that process. So you can stay where you're at, start the permitting process, poke around. And we say to do that in every loan or process of purchasing a home. Start early and get the information, collect all the data, and start coming up with a plan early.
Right. Yep. No, that's what a lot of people are saying, that they are, kind of sitting and holding out for rates to come down a little bit. And I said, it's always good to have this conversation. Have these conversations early, because that way you can start to put your plan together and figure out what's going to be the right solution. So,
Absolutely.
well, Keelan, I think that is good for this week. I am grateful to have you as a resource for everybody out there. And if anybody's got questions, again, please reach out. You can either, comment below or text or call Keelan and I. My phone number is 206-330-6985.
And mine is 206-321-4941.
Awesome. Okay. Well, Keelan, I hope that you have a great weekend, and everybody out there have a great weekend as well.
You
Thank
too.
you.
Bye, everybody.
Bye-bye.